If you're trading the right way, you're going to take breaks from trading. And in my case, I just took a roughly 10-day break from the markets for my 45th birthday. Your break could be for a vacation, a work trip, whatever it is. And so I thought I would show you how to, clean up your charts and get back in the groove after an extended break. I'm Hema Reddy. I use price, time, and momentum to boost my trading and that of my tribes. And here we go. I'm going to demonstrate this on my baby, the market that I love, which is the E-mini S&P 500 futures. So this is my day-to-day layout for when I'm doing day trading. And I start with a weekly chart. So whatever your highest time frame is, that's what you should go to first. I always recommend that even if you're in a particular trading time frame for your market, you have at least one higher you look at. So in your world, if you're trading something outside the ES, go to your monthly or weekly or daily chart before you go down to your time frame chart. Okay, that's tip number one. So I'm starting here in the weekly, and in this particular case, I'm just looking at like annotations that I had literally the last time they were on this chart. I was a year younger, right? Last day of my 44th year. So I'm just going to adjust what's here. And what I see here is that we have a Gann drive that's still in motion. So I'm just going to continue my dash line up and to the right. Nothing really earth shattering on the weekly chart. Okay. So once you revisit your higher time frame chart, then you can go to your lower time frame. And for me, that's the daily chart. So I literally have not touched this chart, made any changes to it in 10 days. Now, when I look at it now, I can see that some annotations are moot. I don't need them anymore. Moot as in M-O-O-T, not moo like a cow. So that's your next tip. When you come back to your charts after you've been away from them, clear the clutter, guys, okay? It's like you go on a trip and you come back, you don't live out of your suitcase, right? You put stuff away, you put it back where it belongs. Do the same thing with your chart. I can't tell you, I have been spending some time building custom trading plans for some of my group coaching students, and I'm surprised at how much clutter remains on our charts because it's a default setting when we first get started, or because we don't know what that information is and we just choose not to delete it. Clear the clutter, promise you it'll help. All right, so now when I look at this chart, in this particular example, I'm probably going to end up doing a little bit more deeper analysis on my own, but just right out of the gate, I'm going to make some observations like, hey, the market was consolidating while I was away from it. So I want to just kind of draw some boundaries on it. So a real simple way to kind of get started in analyzing your charts again is simple patterns. And the simplest pattern of them all is a trend line. So I'm drawing this trend line here. I'm going to draw one here. And again, I'm just doing this to kind of get an idea of what went on while I was away. And that's what I recommend you doing too. So look at the time period where you had taken a break, really focus in on that, and then zoom back out to the bigger picture. All right. So like I said, I'll come back in and for myself, do some deeper analysis, but main thing is on that, main time frame or second time frame away from your main time frame, clear the clutter, get your bearings of where things were, and then move forward. My RSI power zones, my favorite momentum indicator, are also on this chart, and they're on every chart. They're not really telling me anything super special right now, just that the market has slowed down. Okay, now we go to what will probably be scary looking, is my 60-minute chart, because that's where I have so many annotations. And yeah, this is kind of terrifying when you look at it. Haven't touched it since Valentine's Day. So when you see a situation like this, and your charts will have had this too, where to even begin, right? Well, let me tell you. The first thing is that even if you follow a style of analysis like I do in my Skin in the Mini style reports, where I have accountability to my last trade, you really don't need, when you break away from the markets, to come back and worry about every wiggle and squiggle. Just worry about the big picture. So let me show you what I mean. Okay, so here is my personal document that I use to prepare my analysis for the E-mini S&P 500 futures. I call it the Skinny on the Mini, and this is now analysis I'm retaining for myself, where I'm just kind of getting myself aligned for my trading day. And again, the last draft I had was here on February 14th. So what I'm going to do is look back and see where did I last leave off the analysis, and then figure out what happened from there. So I look at this chart and I see that the last time I updated this report was Wednesday, February 14th at 8:58 a.m. Eastern. So I get this gray vertical line and I'm going to move it to that time of day. So that would be the hour ending 9 a.m. Eastern. So now this gray vertical line tells me that's the last time I analyzed the chart. And you can do that for yourself. You don't have to be publishing research or sharing your analysis with anybody to benefit from this good practice, okay? So that's, I guess, tip number 3 here on chart number 3. Mark your time of where you left off on the chart. You can do it before you go on your vacation or trip, or you can do it when you come back like I have. Now, when I go back and I recap and review what happened, I'm not going to, like I said, worry about every tiny wiggle and squiggle. I'm going to look at the bigger picture. So I'm, for myself, going to do this and kind of show you what it looks like, all right? So for me, this would be, all right, on Wednesday, February 14th at 8:58 a.m. Eastern, I wrote, gray vertical line, I wrote, and then whatever I wrote. So that information I had here, and I'm just going to narrate it. Okay, I'm just bringing this as an example. Again, you may not be writing down your research notes, although I recommend you do because it's really helpful. So this is how it's unfolding. At this particular time, I wrote, during the overnight, futures have recovered to retrace 50% of the decline from 5066.5. The RSI power zones on the 60-minute chart are also back at the bear resistance power zone. Futures are therefore at an inflection point. Option A, if they trade lower from current levels, below 4985.75, that would risk 4968.75. If futures trade higher, so this is option B, above 5001.5, I'd watch for gains towards 5028. That's level here. So that's all I talked about in that report. And now for my own personal recap again for myself, I'm not going to worry about everything that happened for 10 days. I'm just going to get the big picture here. So first, I'm going to just delete old annotations that I don't need anymore that are not serving me. So that step you should repeat for yourself. The further down you get on your charts, guys, the more cluttered they tend to get because they're intraday. Now I'm going to remove the bits that I don't really need anymore because I know that the market is traded through these levels. All of this right here. I also don't need any of this. And I don't need this level right here. Now 5006.5, or I should say 5066.5, was traded above, but because it was a previous contract high, so an important level, I will keep a label on it. So that's my next tip to you. I think we're at number 4 now. When you review your charts after a long breakaway, whether it's a couple days, couple weeks, couple months, still keep the most important key highs and lows mapped out because it'll just give you a good sense of what happened. So even this high here, right here, even though it didn't occur until after I took my break, I'm going to come back and note this. I'm going to just put a little text bubble, 5059.25. That was a very important high while I was away from the charts because we rallied up into here and then corrected lower for a good chunk of the following week before rising up again. So I can take all of these other annotations off. And now I'm in a position where I can continue and do fresh analysis from here. So I'll do that for myself now because, again, I'm going to do this analysis for myself, for my personal trading. I just wanted to show you it is completely possible to come back to your same set of charts and pick up on your old analysis and reuse any of it that is applicable. You don't have to throw everything out. You don't have to start from a fresh chart. Do remember, though, that it's important. So this is tip number 5, I guess, here. It's important that you keep your focus on the bigger picture when you take a break. The more time you take away from the market for whatever reason, the more you should be focused on the bigger picture moves when you come back. So as an example, there is this support level here that held and it was great, but it's not useful anymore. It was a 5-minute higher low. What's much more important is this low at 4959. So I'm going to use a horizontal line feature now to update. So it's going to cut all the way through, but because I'm doing this analysis for myself, I know that this line is anchored to this low. And if I want, I can add an alert to it so that if the market comes and trades below it, I'm aware. Now, depending on your charting platform, your alerts may have various options. I like doing an alert once because if I've got the charts open and I'm listening, all I need is that one alert for me to go look at it. I don't need it doing it over and over. I also, in particular, like breakout intra-bar. I do not want to wait for the completion of an entire hourly bar to know if the market's broken below this low, again, if it comes back here. So that's the type of alert I'm going to use. And I'm going to take off some old levels here because of updates I'm making to how I'm preparing this analysis for myself. But I just wanted to show you what you can annotate. Now from here, I will go in on my own and continue to identify the key lows and then look to the highs because we're kind of in new territory. I mean, the S&P 500 in this particular case, and therefore the E-mini S&P, have traded to all-time new highs while I was away. I'm going to have to go back to the weekly and the daily to extract more levels. I'll bring them into the charts for myself. And the overall recap of what happened would be something like, futures traded down to 4972.75, then spent the rest of the week into President's Day weekend, rallying to 5059.25. After the long weekend, futures formed a bigger picture consolidation and traded down to 4959 before resuming higher to end the week, posting new all-time highs. Like, I didn't type that out because I'm just narrating it to you, but that's the kind of idea, that's the kind of time frame you want to capture when you're revisiting charts after a long break. So I hope that was helpful. Go back and watch this video a few times. It's not just specific to the current market action, guys. I gave you 5 tips for how to revisit your charts so you can take your well-deserved breaks from the market, but still come back and get back in there. And if you found value in this video, please give it a thumbs up. Drop a comment down below to share how you conduct your charts review after your breaks, and subscribe to my channel if you haven't already so you can get more information like this, and I'll catch you next time.